Well, good morning, everyone. I'm Bill Traynor, the Dean of Georgetown Law, and it's a pleasure to welcome you to the campus and to our program today. Comptroller Curry, distinguished members of the legal, financial, policy, and media communities, we're delighted to have you here today. And there are three things that I'd like to just touch on in my introduction. First, I'd like to talk a little bit about Georgetown Law's Institute of International Economic Law, or IIEL, our sponsor. I'd like to note the significance of our gathering here today, and then I'd like to introduce our speakers. So let me begin by talking about IIEL. Georgetown University is one of the great centers in the world for the study of international affairs. And the Institute for International Economic Law is the focal point for the study of international economic law at the university. It started in 1999, and its objective has been to facilitate thoughtful and scholarly research and teaching, to convene stakeholder meetings and conferences, bringing together public and private sector leaders, and to offer executive education on a broad range of subjects that concern the law of international economic activity. When it started in 1999, the Institute was focused on trade. It has grown since then to include leading capabilities in international renown in a range of areas, really in the full spectrum of areas in international economic law: monetary affairs, investment and arbitration, tax, financial regulation, and the burgeoning field of financial innovation. The Institute actively approaches these fields as connected and as at times overlapping policy spheres that impact how law is devised, practiced, and enforced. And I'm going to be introducing Professor Brummer in a minute, but that's really his kind of core idea. And I'm just so grateful to him for his leadership of IIEL. Now, part of the work of IIEL, by its nature, involves understanding national rules and regulations on varying matters in order to gain a comparative perspective on global affairs. And since its creation, IIEL has worked closely with not only international organizations like the World Bank, IMF, and the United Nations, but also foreign and U.S. governmental agencies, including, as we'll see today, the Office of the Comptroller of the Currency. So, why are we here today? Our discussion this morning is the critical issue of the evolving nature of finance and financial technology, and the continuation of important work by the Comptroller's Office to support responsible innovation in the federal banking system to enhance safe and sound bank operations, increase financial inclusion, and promote fair treatment of customers. Now, from payment systems to data management, cybersecurity, and startup firms, financial innovation is changing the way banks and other firms do business. And it also, at the same time, it challenges the way regulators oversee banks and the markets they operate in, their interaction with consumers, and the stability of the financial system. So, with all that in mind, we're honored to welcome Comptroller Curry. And the Comptroller will be discussing the possibility of granting national bank charters to financial technology companies, a conversation which follows up on a highly publicized white paper authored earlier on financial innovation in banking. So it's really, it's a privilege for us to be hosting this conversation. So finally, let me introduce our speakers. So Comptroller Curry. The Comptroller, as you all know, is the administrator of the federal banking system and chief officer of the Office of Comptroller of the Currency, OCC, which supervises more than 1,400 national banks and federal savings associations and about 50 federal branches and agencies of foreign banks in the United States. The Comptroller also serves as director of the FDIC, the Federal Deposit Insurance Corporation. Mr. Curry served as chair of the Federal Financial Institutions Examination Council for a 2-year term from April 2013 until April 2015, and most recently as chair of the NeighborWorks America Board of Directors from March 2014 through June of this year. And before becoming controller in 2015, Mr. Curry served as FDIC director beginning in January 2004. And prior to joining the FDIC's board of directors, he served 5 Massachusetts governors as the Commonwealth's Commissioner of Banks and acting commissioner. So it's really a remarkable career. And to kick off a discussion and with the Q&A, Professor Chris Brummer will join Controller Curry. He's not going to control him.
I wish. Oh, I wish.
Watch and see. Professor Brummer is a professor of law and the faculty director of IAEL, and he teaches courses on U.S. and financial regulation. Before joining our faculty, with tenure in 2009, he was an assistant professor of law at Vanderbilt. He recently concluded a 3-year term as a member of the National Adjudicatory Council of FINRA, an organization empowered by Congress to regulate the securities industry, where his work has been praised as making a significant contribution to advancing investor protection. So we're just delighted to have both the commissioner and Professor Brummer with us. And so at this point, let me turn the microphone over to Controller Curry. Thank you all.
It's a true honor to be here at Georgetown University this morning. Today, I want to discuss the OCC's thinking about making a special purpose national bank charter available to financial technology companies that provide banking products and services. I want to specifically thank Dean Traynor, Dr. Chris Brummer, and everyone here at Georgetown University who's made this event possible. I know how much work it goes into arranging this on relatively short notice, so thank you very much. Georgetown Law and the Institute of International Economic Law have long promoted thoughtful exploration of topics crucial to good government, making it the perfect place for today's conversation. Over the past year, no topic in banking and finance has drawn more interest than innovative financial technology, and for good reason. The number of fintech companies in the United States and the United Kingdom has ballooned to more than 4,000, and in just 5 years, investment in this sector has grown from $1.8 billion to $24 billion worldwide. But there is more going on than just technological advances. Customer needs and expectations are also changing in dramatic ways. More than 85 million young adults in America are entering the financial world, with the majority of their financial lives lying ahead. They want technologies and services that provide better, faster, more accessible products and services, and they are willing to switch providers or use multiple providers to get what they want. These consumers expect to be able to transact basic banking and financial business anywhere, anytime, and from the palm of their hands. What excites me most about the changes occurring in financial services is the great potential to expand financial inclusion, reach unbanked and underserved populations, make products and services safer and more efficient, and accelerate their delivery. To live up to that potential, innovators must demonstrate real responsibility, whether innovating within or outside the federal banking system. At the Office of the Comptrol of the Currency, we are making certain that all institutions with federal charters have a regulatory framework that is receptive to responsible innovation, along with, and this is important, the supervision that supports it. Since last year, we have conducted extensive research and discussions with technology companies, banks, community and consumer groups, academics, and other regulators. We articulated clear principles to guide the development of a framework for responsible innovation, sought public comment, and held a public forum in June of this year to discuss the issues surrounding responsible innovation. Recognizing the need for a non-supervisory forum for banks and fintechs to interact with the OCC, in October, I established an Office of Innovation, which is now headed by Acting Chief Innovation Officer Beth Knickerbocker. Once it is fully staffed, the office will be the central point of contact and clearinghouse for requests and information related to innovation. Its staff will conduct outreach and provide technical assistance, and will hold office hours in cities with significant interest in financial innovation to make candid regulatory advice more accessible and to facilitate needed open conversation. Its staff will promote training among agency employees to improve our capabilities and our understanding of these important issues, and lead our collaboration with other regulators, both foreign and domestic. We plan to have the new office up and running in the first quarter of 2017. Establishing this office and our framework are important parts of our responsible innovation efforts. I know these efforts will make a significant difference for the federal banking system, and I look forward to sharing our progress. Our next step, which I'm announcing today, is that the OCC will move forward with chartering financial technology companies that offer bank products and services and meet our high standards and chartering requirements. We have published a paper today discussing several important issues associated with the approval of a national bank charter, and we are seeking stakeholder comments to help inform our path forward. Your comments will help us ensure that the agency's chartering decisions promote the safety and soundness of the federal banking system, increase financial inclusion, and protect consumers from abuse. I hope the professors and the legal minds studying here at Georgetown will take the opportunity to read the paper and to provide your critical thoughts. We have decided to move forward and to make available special purpose national bank charters to fintech firms for a few basic reasons. First and foremost, we believe doing so is in the public interest. Fintech companies hold great potential to expand financial inclusion, empower consumers, and help families and businesses take more control of over their financial matters. Fintechs, while not without risks, can potentially deliver these products and services in a safer and more efficient manner. Preferences and needs of consumers, communities, and businesses are changing, and chartering companies that are finding new and better ways of satisfying those needs is another step towards supporting responsible innovation that is good for consumers, good for the federal banking system, and good for the country. Second, we believe that companies that offer banking products and services should have the choice to become a national bank if they wish to do so. Merely making a charter available does not create a requirement or a mandate to seek one, nor does it displace the other choices a fintech company may have. For example, to seek a state bank charter in a state that makes one available, or to continue to operate outside of the banking system. A company's choice to pursue a national charter should be driven by the company's business model and strategy on how best to serve their intended customers. The ability to choose a federal charter or state charter exists today for all banks, and that choice is essential to the dual banking system today, just as it was in 1863 when the OCC was chartered. Preventing this class of companies from having that same option hurts the nation's dual banking system and could make the federal banking system less capable of adapting to the evolving business and customer needs of today and tomorrow. Providing a national charter to those responsible innovators who seek one and meet our high standards can help promote economic growth across the country and recognizes that technology-based products and services are the future of banking and the economy. Third, having a clear process, criteria and standards for fintechs to become national banks ensures regulators and companies openly vet risks and that the institutions that receive charters have a reasonable chance of success, appropriate risk management, effective consumer protection, and strong capital and liquidity. Through the chartering process, the OCC can fully explore how the proposed bank's policies, procedures, and practices are designed to protect individuals and small business customers. Many fintechs will choose to partner with existing banks or provide services to banks and other financial companies, but some will seek to become a bank. In those cases, it will be much better for the health of the federal banking system and everyone who relies on those institutions if these companies enter the system through a clearly marked front gate rather than through some back door, where the risks may not be as thoughtfully assessed or managed. The OCC has the authority to grant special purpose national bank charters to fintech firms that conduct at least one of three core banking activities, and they are receiving deposits, paying checks, or lending money. But that authority is not to be taken lightly, which is why I've asked staff to develop and implement a formal agency policy for evaluating applications for fintech charters. The policy, informed by the comments we receive on our white paper, will articulate specific criteria for approval, as well as issues that we should consider and conditions that should be met before granting such charters. Such a policy helps ensure that we evaluate future fintech applications in a thoughtful and transparent manner, and that we have the necessary guardrails in place to ensure that approvals consider important factors such as safety and soundness, financial inclusion, consumer protection, community reinvestment, and corporate responsibility. Today's paper specifically asks for comment on what types of activities and expectations the OCC should require for entities seeking a special purpose national bank charter that demonstrates their commitment to financial inclusion, that supports fair access to financial services and fair treatment of customers. In addition to sharing our reasons for moving forward on fintech charters, I want to spend a little time today discussing concerns that have already been expressed. Issues fall into two equally important categories: consumer protection and financial inclusion, and regulatory fairness and supervisory vigor. Individuals and businesses should have access to useful and affordable financial products and services that meet their needs and that are provided in a fair and responsible manner, no matter the source of those products and services. I understand and share the concerns about the applicability of laws meant to protect consumers, expand financial inclusion, and to promote community reinvestment. For instance, there are certain laws, including the Community Reinvestment Act, that only apply to deposit-taking institutions insured by the FDIC. Consequently, thousands of fintech companies that provide bank-like services today and are not insured by the FDIC are not encouraged to meet the credit needs of the communities they serve through the application of the CRA. On the other hand, the OCC has the unique ability to impose requirements in some or all of these areas through the chartering process to require companies seeking national charters to support financial inclusion in meaningful ways as appropriate for the business model and activity of a particular company. As a former state regulator, I also understand worries about the application of state law to national banks. That concern is not exasperated by granting special purpose charters. State law applies to special purpose national banks exactly in the same way and to the same extent as traditional national banks. Examples of state laws that generally apply to national banks include laws on anti-discrimination, fair lending, debt collection, taxation, zoning, criminal laws, foreclosure, and torts. In addition, any other law that only incidentally affects national banks' federally authorized powers to lend, to take deposits, and engage in other federally authorized activities also still apply. The OCC has taken the position that state laws aimed at unfair or deceptive treatment of customers also apply to national banks. The state laws that typically do not apply are those that impose licensing requirements on a company in order to engage in certain types of business. The second issue we've heard relates to regulatory fairness and supervisory rigor. The worry here is that by providing a special purpose national bank charter, we are somehow tipping the balance of competition by allowing special purpose banks to compete with full service banks without assuming any of the responsibility. But the reality today is that the 4,000 fintech companies out there are already competing with national and state banks without regard to any of the national bank responsibilities and under a patchwork of supervision. Granting national charters to these companies who desire it and warrant it doesn't weaken the competitive position of existing banks or the dual banking system itself. In some ways, it helps level the playing field because statutes, by their very terms that apply to national banks, would apply to all special purpose national banks, even uninsured ones. This would include, for example, statutes and regulations on legal lending limits and limits on real estate holdings. And as far, as far as providing lighter touch supervision, I have made it clear that if the OCC grants a national charter in this area, the institution will be examined regularly and held to the same high standards the OCC has established for all federally chartered institutions. These are important issues which we must carefully consider as we implement our decision to entertain charter applications from fintech companies. I look forward to hearing from many of our stakeholders through their comments on our paper. I know folks will not be shy about sharing their views. We're used to it. In closing, I want to thank all the lawyers, licensing and policy experts and examiners, and many of them are sitting here in the first two rows, who helped us with our paper and helped us move forward in this important new direction. I especially wanted to acknowledge and single out and hopefully embarrass Karen Solomon, our Deputy Chief Counsel, for her leadership in this area. I hope everyone appreciates the transparent and deliberate manner we have followed in considering this decision and all of our work on responsible innovation. We recognize that our decision will affect the federal banking system for many years to come, and I believe that effect will be a positive one. I again want to thank Dean Traynor and everyone here at Georgetown for inviting me here to share this announcement, and I deeply appreciate your substantive interest in this subject, and I look forward to our continuing conversation. Thank you very much.
Thank you so much, Comptroller, for your comments. Here over at the Institute, we've been very excited about this, and it really brings to the fore a number of issues that many of us, certainly in the audience, are thinking about. One of the reasons why I was particularly pleased was I saw the remarks, and I said, oh, wow, you know, a little bit of regulatory history is going to be made today over at Georgetown. And I just want to sort of flesh that out a little bit. I think it'll be important as people try to digest really what those comments mean for folks. But when you look forward, how many of the 4,000 fintech companies do you think are actually going to end up seeking a charter? And what do you think will be actually the likely responses by the more traditional banks? You can see or imagine really a range or a spectrum of responses.
Okay, I don't think we presume to know in advance who is going to seek or be eligible for a national bank charter. But I think the important thing to recognize is that we shouldn't have the doors shut from the very beginning. Again, anytime you look at any bank chartering application, it's really a tailored, individualized evaluation of a business plan, of management, and the capital and internal risk management structure behind it. So I think that firms should think about what our requirements are. We've tried to be, the goal here is to be transparent, and we will be further transparent once we have the benefit of comment, so that people will be able to assess the likelihood or their ability to meet our requirements, and then we can engage in a back and forth in a regulatory discussion in our normal licensing and chartering process.
One of the challenges when one talks about fintech more generally is that it's a concept. It's not always a legal category, even though lawyers like to think about it. Sometimes it's a slogan, but it can also encompass a wide variety of activities in the financial sector, and something that you mentioned in your remarks. As you move from the 10,000-foot level to more prescriptive rulemaking, and as staff tries to think through what the next steps are, you encounter the problem or the challenge that fintech companies are so diverse and engage in different parts of the value chain. And as a regulator, you have to come up with some kind of ex-ante approach to think through how to deal with each of the different aspects, whether that be lending, deposit taking, and payments. How do you think, or how do you envision the process going forward, especially given that diversity and the fact that many of the rules for the entire sector may have to be more nuanced?
No, I do think you've really identified that there is a diversity of approach in the fintech arena, and that's really going to probably be the hardest evaluative aspect of the chartering process, is to see how that somewhat niche approach to banking fits in with our regulatory environment. The important thing I want to double back to is that going forward does not require a regulation. This is really under our existing chartering. And I do believe that our chartering process has given us great experience in evaluating individual applications. And just like there's segments within the fintech industry, there's some segmentation in basic business models for traditional banks. So certainly a bank that's a payments model, a fintech firm that's in the payments model is going to present different issues or different concerns than an entity that's engaged in marketplace lending or consumer lending. But I do believe we have the ability and the framework to properly evaluate each of those types of firms seeking a charter.
Well, just moving just one step further, innovation is a dynamic activity. Innovation is always arising, whether or not it be in market infrastructure, whether or not it be in the products of different kinds of businesses. And as a result, even where you are, I would assume one looks at an individual a charter, there are always and will be certain kinds of unknown factors as information changes, as the market environment changes. How can one, on the one hand, provide flexibility to adapt with changing information and with changing data, while at the same time providing enough predictability in the environment for fintech companies as well as other regulators to be able to adapt accordingly with your decision making?
Okay, I think that what I've always been impressed about the banking system and the OCC's history is that banking really is evolutionary. We certainly don't have the same banks that we had when the business model when the OCC was established in 1863. And I think it's really due to the fact that we have a system where you have a framework which consists of a basic statutory authorization and rulemaking. This kind of gives you the rule book. But the important thing, and this is where I think the OCC excels, is in the area of direct supervision. And it's the supervision aspect of what we do that gives you the ability to deal with your issue of the evolutionary or changing nature of a banking business, and I would include fintech firms if they're chartered in that same category. So I think that's how we'd approach it. I also think that's why, in segmenting our approach here, we thought it was important to go first out with our innovation office, that we need to maintain that open dialogue, the need to continually remain informed and understanding of both industry and legal developments that may affect the fintech area.
Yeah, and because for everyone here, this is all rather new, maybe I should just take a step back now that we've looked forward, just to make it really clear. In your, or in staff's opinion, when you look at this new mechanism, this new availability of a charter, why shouldn't fintech companies just obviously be required to apply for a full service charter? What is the advantage specifically of the special purpose charter? And even more generally, how does that compare to other kinds of requests that I know some folks here in the audience have made about regulatory sandboxes and other kinds of approaches taken elsewhere?
Yeah, I think the approach we have is we don't want to presume or require that a fintech firm fit into the structure of a traditional bank. I think that's the appeal of having the option of a limited purpose national bank. So I think the structure itself is more adaptive to the fintech industry and what's going on there. So that's really the purpose, is to allow some flexibility. There's certainly we're not saying that there's any bar to a fintech firm that wants to be a full-service bank. If they want to pursue a standard commercial bank charter that's FDIC insured, they can go that route. The only difference there is that it would require the separate approval for deposit insurance from the FDIC. So we don't want to presume that or jam somebody into a particular model. On the sandbox, I'm glad you mentioned that. I think there's been some confusion over what our position is with the sandbox. I think it goes back to, what do you mean by a sandbox? And I think the assumption that the OCC's made, that definition means you are immunized against any consumer liability or consumer harm. I think that is an irresponsible position to take as a public servant, which is our goal, to protect consumers. What we're doing at the OCC with our innovation office is really trying to understand more about what types of products or services that are being developed, and to have a non-regulatory forum where either a fintech firm that wants to be a limited purpose national bank, or, and this is an important distinction, banks that want to partner or banks that want to acquire that type of product or service, what are the regulatory requirements in view of the OCC? The other point I want to make is that our innovation office is not limited to fintech type of issues. It really is meant to encompass creativity by the banking industry, who may wish to create a new or innovative product or a new twist on an existing product. And I think we can help that development if we do it in a non-supervisory setting, which in itself can be chilling, and that having that informal dialogue really benefits creativity within the existing banking industry, and also new entrants who have new products and services that ultimately, I think, are in the public interest and will benefit the public.
So, certainly, although there are and will be some flexibility with the structural requirements for these fintech banks, you've emphasized that the objective is to avoid some kind of backdoor opportunity to avoiding some of prudential and operational requirements for these firms. And I think maybe we should take the opportunity to ask a little bit about what some of those expectations can and will be. So how does one, or particularly for a non-deposit taking institution, but I guess more generally, even when you think about payments, how do you think about the question of capital requirements? Again, given the fact that it's important that in the fintech space, you have different kinds of services that are being offered at different points in the value chain, and even within each of those points, there are very, very different business models. And as a result, it's a highly, potentially resource intensive and engaging process. I assume that the good folks over at the OCC are going to have to take on to really make this work. But how do you think about capital requirements for fintech firms? I'll just stop there, and then I have a follow-on question, but I think that's enough.
Yeah. First off, I think capital is essential component of any decision, whether to approve a full-service national bank or a limited-purpose one. I think you have to look at capital in the context of the business model and the risks that are attendant to that model. So to some extent, with a fintech firm, you need to look at the risks behind that business or technology and craft what's an appropriate capital requirement. This is very similar to what we've done historically with some of our other limited purpose entities, specifically trust or fiduciary firms, where existing bank-centric capital requirements could be too low or inadequate. So there's going to be an element of looking at the business model. Also, I think in terms of looking at capital, and these are the things that we'd want to hear from commenters, fintech firms, we also need to be able to resolve those firms if they run into difficulty. So there needs to be, as part of the calculation, a buffer that either reduces the risk of failure or allows for a soft landing of that business through either the regulatory process or through our receivership authorities under existing law.
And to what extent would you also expect, because as I understand it, you have your capital component, it's almost, I won't say living will, but certainly a kind of a wind down plan for certain kinds of firms. When you think about operational risk, is the approach that you envision to be just making sure that you have the capital buffer, but are there also potentially a kind of risk-resistant criteria that you could imagine emerging over time, particularly when you get into questions like payments?
Yeah, again, part of the recipe or the framework which all national banks operate under, it's rule book plus active supervision. So as part of our supervisory programs, we want to make sure that some basics are there, that you've got capable management, and that management team and the board have a sound risk management program in place. So that's the buffer to help deal with some of the turbulence that may occur either economically or through by the nature of the business. So we want to see that that's there. So that's one safeguard that we'd be looking to. I think, again, we're firm believers at the OCC in providing tailored supervision. It's what's the business model and what are the real risks, the hierarchy of risks given that model. Certainly with a firm that's engaged, centered on the payment system, issues about cybersecurity, the recovery plans and ability to resume business is essential, as well as mandates in terms of preserving personally identifiable information. So I think we would be tailoring our supervisory program based on the business model, just as we do with a community bank versus the many large globally active banks that we supervise at the OCC.
And in order to I guess, effectuate some of this, I would assume that you would also have to look at sort of the interconnectedness of those fintech companies to the larger banking community. So I'd assume that there's also be some kind of systemic awareness and data gathering as to sort of how that infrastructure is
Yeah, I mean,
evolving.
that's really, really an ongoing initiative, actually. Cybersecurity, I think, is probably the single most potentially destructive threat to the banking industry. I think that equally applies to any fintech firm, whether they're chartered by the OCC or not. We've spent a lot of time over the last several years, and historically, actually, looking at institutions, IT, their information security, and something that I think that the OCC has a lot of expertise in, third-party vendor management. And again, I go back to earlier initiatives that we've had. Our innovation office, I think, is an ideal clearinghouse for explaining what our expectations are to fintech firms that do not intend to be a national bank, but do intend to work with our banks. And it's really because of the cybersecurity and the data information integrity issues that you mentioned.
Moving to the question of consumers, you've mentioned the Community Reinvestment Act a number of times. It's an interesting statute because it's largely exercised through a geographic lens, and that's a challenge when you meet a digital age where folks are operating via the internet. I know that by interpreting your remarks that you view this chartering process as potentially a way of ensuring some of the core values of the Community Reinvestment Act are preserved. It's a little bit beyond your immediate, certainly your immediate mandate and responsibilities, but in order to do that effectively, do you believe that any changes to the Act itself need to be made to act in parallel with the efforts that the OCC would take in, again, embedding some of those values in its rulemaking and supervision?
Okay. The Community Reinvestment Act was enacted in 1977. The world's changed a lot. So, in terms of a broader public policy discussion, I do think, as you identified, we need to look at that geography anchor to the CRA for all institutions that are subject to it. In terms of a special purpose charter for fintech firms, I would say, there already is a mandate in our chartering process. Our mission, our statutory mission, requires us to ensure that any bank that's chartered or supervised by the OCC operate in a safe and sound manner and is a fair treatment of consumers, including small businesses, and to the betterment of their community. So, saying in the chartering context that you want to focus on basically how well you're delivering your service to the intended community, I think is part and parcel of the overall purpose of the National Bank Act and its chartering provisions. I do think we benefit from having extensive experience with the Community Reinvestment Act. We collectively in the banking agencies have been able to adapt its requirements to banking institutions with very different business models. And I think that those learnings, as a general matter, can be appropriately applied in the chartering context. Just a minor matter that I want to point out, our chartering process allows us to impose prudential conditions on the granting of that charter, so that we would be looking, anything we do in this area, we would be looking to do it through those enforceable conditions, either in the approval order or in the Articles of Association that we approve.
It's quite impressive. You've thought through a variety of tools at the OCC in order to get this project off the ground. But what kind of coordination do you think would be or will be necessary with other regulators in order to be effective? Certainly, from a bird's eye view, you can imagine that folks over at the other banking regulators, over at obviously the state regulators CFPB, potentially some of the market regulators could have an interest in this. Do you see any kind of mechanisms or future collaboration necessary in order for you to advance your own mandate? And are there pockets of the government where you think that coordination may be especially needed?
Yeah, I'm a firm believer, and this has really been a theme I've had since becoming Comptrol of the currency in 2012. There really is an imperative for all financial regulators to not just to coordinate, but to collaborate. And I think they're two different words and different meanings. We've made it a concerted effort at every level of the OCC to foster that goal. You mentioned the CFPB. That's an area where we have considerable overlap. It's really in our benefit and the benefit of the institutions and their customers that we not be working at cross purposes. So we have, it's a work in progress, of course, but there really has been I think a good level of collaboration. The same with our federal banking agency colleagues. We have always worked closely with them, but I think given some of the after effects of the Great Recession and certainly under some of the mandates of the Dodd-Frank Act, we just have to work better with each other. Certainly going back to the Fintech, and this is in our paper, if you're in the payment system, that really requires extensive coordination with the Federal Reserve Board, and we would, do expect to work with the Fed, and also would really appreciate any comments people have on that area.
Great. Soon I'll be opening it up to the audience, although I did have a couple sort of remaining or lingering questions. To the extent to which the OCC, and for that matter any other regulator, starts to engage financial innovation and changes in market infrastructure, do you see the need to also advance so-called RegTech, that is the technological capability of the OCC? Are there particular aspects of the financial industry or the financial sector where the OCC really feels a need to keep up its game, particularly as it pertains to your work in Fintech, and what kinds of steps do you envision being taken alongside and in parallel with the new national special purpose charters that you are unveiling today?
Absolutely. I think there's really very strong potential benefits to RegTech. I think particularly in areas, and this is an area that we would apply and we would look to enforce with any bank, national bank, BSA, AML, Bank Secrecy Act, the ability to marshal technology through RegTech has a clear cost-saving and consistency benefit that we currently don't have, and I think that's a positive. Internally, we have access to a lot of confidential supervisory information and other information from other sources. From a planning and operations standpoint, we recognize and are working at making sure that we're able to marshal that information and to not fall into the trap of having it be siloed off within the organization. That's a challenge operationally for us. Again, I think technology can help us be better supervisors, and that's something that I hope having the Innovation Office actually will help speed us along in that process.
Well, that is absolutely fantastic. I want to invite folks to the podium or to the microphones, and as they do, a quick word of thanks to Christine Washington and Brian for helping to organize it. It's been fantastic. Georgetown, we've been doing a lot of Fintech work, and as we've talked, we look forward to maintaining our partnership, and already we have some folks. We'll start here.
Thank you very much. My name is Tom Brooks. I'm with the Clark Hill Law Firm. You alluded to well, back up a bit. The 52-odd trust banks that have national bank charters are mostly, I think, owned by bank holding companies or banks. Can you envision and I may be wrong on that, but can you envision that bank holding companies, existing bank holding companies or banks, getting a special purpose national bank charter to further themselves engage in more fintech type operations, whatever their business plan might be?
Again, I think we'd have to look at a specific proposal or transaction, but you know, it would have to be within the framework that we've outlined in our paper.
Okay, thank you.
Yes, Comptroller Curry, this is Ted Knudsen. I'm a reporter for Financial Advisor magazine. You mentioned it's imperative for all financial regulators to cooperate, and the SEC recently had its first FinTech conference. How do you see this cooperation evolving with the SEC and the National Charter in terms of you know, the fact that a lot of FinTech companies not only have, you know, lending operations, they also have brokerages, they also have financial advisory operations. And for Professor, with your experience with FINRA, I'd like to have your comments too.
Yeah, I think, you know, if you look at what we already have today, there are a lot of those relationships already exist with traditional banks. So it's simply a matter of, you know, identifying any areas that are materially different and trying to make sure that we're collaborating with the other regulatory agencies. But again, you know, I think when you're talking about the national bank charter, you're really talking about the vehicle for delivering a product, which, you know, is a little bit different than the role of the SEC if they're being funded through the markets. They're going to be related, and but what our piece of it is distinct, I think.
Just as an observation to your, you know, I sort of to direct part of that question your way, one of the things I saw was very interesting in the approach that you're unveiling is you do see some kind of similar procedural steps being taken, say, at the SEC under the Jobs Act in terms of looking at you know, startups and emerging growth companies to sort of evaluate and to engage them at an earlier stage in the process so they can feel more comfortable with their regulator, and you know, to sort of figure out what kind of more collaborative relationship. And I, you know, I do wonder to what extent, you know, on a procedural end, there are practices learned. Certainly, I think your approach here is going to be emulated not just here, but probably overseas in different jurisdictions, looking to learn and take note of what works and what doesn't work. Here in town, do you get a sense when you're talking to your staff about, well, you know, what are folks doing elsewhere, and are there things that we can learn from and sort of adapt to our own local or our own stakeholders?
Yeah, no, I think it helps to look at what we're announcing today as the third part of an entire process. You know, number one was engaging with others in this field, whether it's the fintech firms, other innovators, other regulators. That was done early on. That helped inform us with what we did in October, recognizing that we needed that, you know, really the communication vehicle that's outside what we normally do. Yeah, I think that really is a change in approach that we need to, and it's in our paper today, the need to have a meaningful and ongoing dialogue with other regulators here in the United States, the market regulators, as well as international activities. I would have to also point out that you know, we looked at what was being done in other jurisdictions, the United Kingdom in particular, and I think we had found some great value in assessing how that would work here, and that was part of why we ended up, you know, on that quote-unquote sandbox issue, taking, I think, what initially was viewed as a divergent approach.
Hi, Comptroller Curry, Professor Brummer. I'm Tara Jeffries. I'm a reporter with Morning Consult. Comptroller Curry, you addressed some state regulator concerns in your remarks, but the Conference of State Banking Supervisors earlier this month said that they oppose a national charter from the OCC for fintech, saying that it would allow the OCC to pick winners and losers in the industry and basically advantage bigger, more established players in the marketplace. What would your response to that be?
Well, first off, I think what you have to remember is we have an existing system of national bank chartering and state bank chartering. In essence, there is no difference here. The options I mentioned in my remarks, there's an option to seek a state charter. There's an option to seek a national bank charter or a do-nothing option. And that's really something that's inherent in the dual banking system itself.
Thank you.
I'm Gregory Roberts. I'm a reporter with Bloomberg BNA. Maybe in regulation as in comedy, timing is everything. We're in a period of transition, and I wanted to know whether you have had any contact with the Trump transition team in general, and specifically in regards to this issue, and how you think that might play out.
The OCC is an independent bank regulatory agency. We have a job to do. It doesn't stop in November. It doesn't stop in January. This is an ongoing process.
As are the questions that are ongoing. Yes, please.
Comptroller Curry, I was wondering if you had any conversations with your regulatory peers about potentially having these other agencies provide their own chartering system for fintech companies, and potentially having a race at the bottom between different regulators offering charters?
First off, on the federal side, the OCC is the only federal bank regulatory agency that can issue a charter, so that there's no competitive issue there. I've been both a state and federal bank regulator. I've been a charterer both at the state side and the federal side. I think the dual banking system works best when it's a race to the top to compete for excellence. And that's really the policy and the position of the OCC.
I'm Carol Van Cleef with Baker Hostetler. And I commend the OCC for the incredible work that's been done in this area over the last year and a half or so. My question comes with a little bit of perspective, having seen a variety of efforts over the years to experiment, to develop different types of bank charters, and in particular the credit card bank charter, and looking at examples like Capital One, which may be the original Fintech bank. What we have also seen over the years is the fact that the special purpose banks are approved, but ultimately are brought back to having to operate as full-scale banks. The great pressure is ups and downs of the economic cycle ensue, that there's an effort to make sure that they have a more diversified underpinning and look more like a traditional, what we think of today as a traditional banking organization. Are there, I guess, how has that figured into your thought process at all? And if so, I guess where do you see that going in the next phase?
Okay, I think, again, the OCC, I think we're a sprite 153-year-old, but we have the advantage of our past regulatory experience. So you mentioned the credit card banks, the numerous trust companies that we've chartered, and a few other entities. So I think we've learned from every aspect of that, and that's really gone into our initial paper on responsible innovation and today's paper. I think what you're referring to really goes to the business model and what a potential applicant is trying to do, or whoever becomes a national bank. If you're going to be engaged in consumer lending, funding is an issue that would have to be addressed in the chartering process. If you're relying on the markets, it's more volatile. So there has to be an assessment of the risks to the business model if you're not relying on insured federal deposits. Regulatory concerns that would have to, wanting to have stable funding would have to be addressed in part of the application and review process. But again, we go back to the view. I think the experimentation that occurred with the credit card banks and with limited purpose trust companies actually have benefited our system. And the goal here is not to hold ourselves back from being open to experimentation as long as it's done in a responsible manner. And what we're trying to do with all of our activities in this area is to be transparent. And that transparency, I think, is essential to making it work, whatever we do, to work well and to be well thought out.
Hi, Comptroller. My name is Lalita Clazel. I'm a reporter with American Banker. I have a question about the paper. In the paper, you mentioned CRA and how you would use a chartering process to ensure that firms that apply for the charter would actually have to have financial inclusion kind of policies. And I was wondering, is that something that's going to be determined by firm, depending on their own business plan, or is that going to be like guidelines that you're going to give out, and similarly for capital requirements and liquidity, is that going to be a more formal requirement that's going to be made out
I
in the
think it's
future?
important. I mean, there was a strategy behind this. We're putting out a paper. That paper at the tail end has 13 questions that we're seeking comment on. And it really kind of gets to what you're talking about. There's a couple of different business models in here, and we're actually asking, for insight as to how we would apply the criteria that we've identified to those different types of models. Certainly it's going to be a different case if a potential applicant is not a consumer credit provider versus one that is. But again, we want to flesh that out. And then again, once we get the feedback from the paper, we would then formalize as best we can what the criteria and framework would be in those specialized areas.
Okay. We are at a law school, but nonetheless, we will not have Socratic questioning of the audience to see what they've learned.
I've always wanted to be on this side of
It's much better. It really is much better.
Can we pick on the lady with the
exactly.
green jacket?
Yeah, exactly. Well, thank you so very much to all of you, and especially to the Comptroller for coming. We will be distributing to everyone also a copy of this paper, as well as to several other 1,000 people. If we have an ongoing work stream in this area, and if any of you are interested in also our thinking and our collaboration, please do let us know over at IEL. Thank you so much for your attendance.
My thanks to Georgetown and Professor Brummer.